The income methods and the married put. Quick look at the obvious, maybe not so obvious adjustments that are used in the blueprint. Over the past few weeks, we've talked about how to protect your positions and get income. We focused on how the proper structure is important. Presentations such as why I don't mind down days or weak weeks while being long stock positions, and of course, the proper married put structure, the best way to limit risk in uncertain markets. But what about the next step? Do we just open this proper married put structure, hope that the stock moves up, look to close the position and realize a profit? Absolutely not. The blueprint teaches the power of the income methods, 12 different ways to reduce that initial low risk, lower the break even, get income in your favor, and potentially bulletproof the trade. The first days of 2023, continued on with a little bit of the same uncertainty we've seen leading up to the end of 2022, and of course, all throughout 2022 as well. Tuesday, January 3rd, the market had a strong pop up. Then we had a slight little pullback from that pop, and we saw more upwards movement on January 4th for most sectors and most industries. We're looking at a side-by-side comparison of the 5-day chart of SPY and QQQ, almost identical in some respects of the first 2 days of 2023. Well, my focus was really on 3 stocks, and I might just call them the good, the bad, and the ugly. NEM, Newmont Mining, was up about $4.30 or 9.1% in the first 2 days of 2023. SCHW, Charles Schwab, was up, down, and then up again, almost mirroring those 2 5-day charts we saw over the last 2 days of SPY and QQQ. ANET, Arista Networks, down $10 or 8.1% to start off 2023. Absolutely the good, the bad, or more along the lines of the meh with Charles Schwab, and the ugly with the ANET position. Why am I focused on those 3? Well, these are my open positions in the Fusion portfolio RadioActive Trading, existing married puts that we've been tracking. Newmont Mining, we originally started off with an initial risk of 7.4% back on September 30th. Arista, an original risk of 8%, starting off on October 4th. And the Charles Schwab Incorporated started off at 12/27/2022 at the end of the year with a risk of 7.1% initially with the proper structure. The good. The NEM position since opened on September 30th. Here we're seeing a look on the left of what occurred in the Fusion portfolio since September 30th with 3 income methods applied. We initially opened Newmont Mining with a cost of $42.32 on September 30th. We opened the March 45 put with a cost of $6.25, which gave us a risk of 7.4%. At the time, the put was roughly 170 days out from our entry. As we went into the trade, around November 15th, the stock had moved up. We applied income method number 4, using the put option as our second working asset to lower that initial at risk from 7.4 down to 4.8%. Then we generated some income by simply selling a call, income method number 1, to take the risk down to 3.8%. We rolled that call via income method number 2 in the blueprint to take the risk down to 3.3%, then rolled the position again on December 2nd to lower the risk down to 3%. As we stood at the beginning of 2023, we have a controlled risk position with the put still out to March expiration, 70 or so days away, 3% at risk in the absolute worst case scenario. The stock is up to $50.40 or so. So we're in the profit range and we still have infinite upside profitability. Then the stock continued to move up. And we have to consider what income methods can be used to further lower that low initial at risk, generate income in our favor, potentially bulletproof the trade, but leave the upside open. At around 12 noon on January 4th, Newmont Mining was at $51.70. Using the power options tools, tracking the position in the portfolio with all the transactions we've made and linking to the position analysis for potential rollout opportunities, we see many income method number one positions that could bulletproof the trade and increase the potential maximum return. Great premiums, good outcomes. But the effect of income method number one is that it caps the upside gains. We're selling a call against a long stock position while holding a put option in place. As the stock reaches our strike price, potentially if we sold, let's say, the 51 strike call, we would have a bulletproof position. But if Newmont Mining jumped another $2 or $2.40 as it had in the first 2 days, we might start to trail off of that maximum profit due to the capped upside. But let's talk about our second working asset, the put option that is in place but is still retaining a fair amount of its time premium, as we still have 70 days to expiration. We have opportunities with what's called income method number 3 and income method number 4. With income method number 3, we could sell our existing put and roll closer in time to the February near-term expirations. As we can see, this would bulletproof the trade to where we have no risk, a guaranteed profit of 1.5%, or a guaranteed profit even if the stock fell to $1 per share of 2.9%. Another option, income method number 4. We could roll the put up in strike, but also the opportunity to roll it further out in time to increase our time in the trade and our time of insurance. Here we see opportunities to roll out to the June 50 strike put and the June 52.5, to where we'd still keep a low-risk position, lower than what we have right now, by moving up the strike, even though we're increasing the time value to 2.7% or to almost bulletproof status of 0.2%. And for a little bit of fun, we also see an income method number 6 opportunity, a bear call credit spread that could reduce the risk to near bulletproof status, generate some income in our favor by selling the 20th of January 52 call and buying the 20th of January 56 call for a net credit of $1.11. Now, all three of the positions are a little bit different. All three have pros and cons, but all three would leave the upside open in case Newmont Mining continues to move the next day or two at another 2-point movement or $2.30 movement, as we've seen in the first 2 days. So which one to choose? NEM is starting off 2023 with strong moves, as we've discussed. It does appear that gold and silver, the mining stocks, are slightly back in favor to open the year. That favor might last a few months. That interest might only last a few days because the market and the economy as a whole is still uncertain. What I would like to do for my NEM trade is to lower the risk to near $0 if possible for pending uncertain market conditions. I'd like to generate income and see something coming into my portfolio if possible as well. I don't want to cap the upside in case these movements that we've seen in the first 2 days continue later on, maybe 4 days away, 6 days away, or 7 days away, with another sudden gap up of $2, $2.40. But I also want to give myself more time in the protected insured trade for the opportunity to do more income methods, generate more income, and maybe even collect more dividends with the proper structure in place. What I just discussed with you is the CEGA model that we use in radioactive trading. It's the decision-making process used for each income method and actually the initial structure itself. The CEGA model stands for C, conditions, E, expectations, G, goals, which leads us to A, the action we're going to take on the position. For the NEM position in the Fusion portfolio, the current C conditions, NEM opened 2023 strong, but the market is still uncertain. More quick jumps up in the stock may occur. E, the expectations. Gold, silver, and mining may become a haven in 2023, depending on the strength of the dollar and other market conditions. NEM is a prime stock placed for that movement if gold, silver, and mining become a haven in 2023. G, the goals for my married put. I want to take advantage of the strong moves to reduce risk and perhaps bulletproof the trade. I want to leave the upside open for expected other jumps up in the stock price that we saw in the first 2 days. I'd also like to increase the time of insurance to be able to use more income methods over a longer period of time to get higher potential profits and a higher potential return. This leads directly to my action for the income methods we saw in the previous slide. I'm going to use income method number 4. I'm going to reduce risk to near $0 while extending the time frame of my insurance policy and the ability to use other income methods going forward. The income method number 4 specifics that we used following the rules in the blueprint were entered into the Fusion portfolio for our Fusion subscribers and my personal portfolio on January 4th. We sold to close our existing March 17th 47.5 put for $1.73, and we bought the June 52.5 put for $5.50. The stock was trading at 51.61 at the time of the trade. So of that $5.50 we paid for the 52.50 put, about 90 cents of it was intrinsic value. This took our risk down from that 3% down to 0.5%. Although we paid a debit to do this adjustment, we added to the cost basis. We paid the debit of $3.62, but we gain 5 points higher of a guaranteed exit from 47.5 to 52.50. The break-even increases, but that's only in the worst-case scenario, 163 days from now. Not at the current price and not on the current date. We've reduced the risks near bulletproof status, gave ourselves more time, and we still have an opportunity to do other income methods to generate income to further lower that initial at risk and maybe potentially bulletproof the trade without capping the upside. One simple move with that second working asset, although I didn't generate income directly, we've lowered the risk and given ourselves more time manipulating the second asset. The blueprint teaches 4 ways, really 5 ways, that we can use the put option to our advantage in different ways, whether the stock has moved up, the stock has moved down, the stock is stagnating, or we're expecting a decline going forward in the market. Graphical analysis of our income method 4 for the Newmont mining position. Position prior to the adjustment on the left, we had a total cost, all of the adjustments, the initial stock purchase price, adjustments on the puts, and premium collected of $48.98. We had a put guarantee price of $47.50, so our maximum risk was $148 per share or 3%, while leaving the upside open for infinite maximum profit. Yes, the break-even's at $48.98, but again at the time, that's in the worst-case scenario at March expiration if and only if the stock is trading below $47.50. Now the new position on the right. We've rolled up the put. We've taken into account the loss on the initial put of the March 47.5, so the new cost basis of the Newmont mining shares is at $47.25. We now own a June 52.50 put on Newmont with a cost of $5.50, we increased our cost basis to $52.75. However, we also increased our guaranteed exit to $52.50, which means the maximum risk if Newmont Mining is trading below $52.50, in the worst case scenario, all the way to June expiration 162 days out, means we can only risk 25 cents per share or 0.5% against the investment. And we still have infinite upside profit potential. We increased the time by 91 days. We lowered the risk by 2.5%, and we left the upside open. Although we increased the cost basis and the break even, we've satisfied most of the CEGA model that we wanted to apply for the Newmont Mining position, especially heading into uncertain markets with a low risk of 0.5%, and that is a guarantee even in the worst case scenario for 162 days of potential trading opportunities. Speaking of opportunities, is there an opportunity for more? Absolutely. Our CEGA model was mostly satisfied except getting possible income and leaving the upside open. This is the perfect opportunity for income method number 6, one of the riskless spread trades that are discussed in the blueprint. Taking my initial structure, I can apply income method number 6, a bear call credit spread, without taking any extra margin or adding any risk due to the structure. We could sell to open the 20th of January 52.5 call for about 95 cents, and at the same time, buy to open a 20th of January 55 call for 35 cents. This would be a bear call credit spread, and we're going to take a net credit of 60 cents up front. By itself, we would normally have to cover the $2.50 difference in strike prices as the margin requirement. But done in the proper structure here, there is no monetary requirement. The broker just sees this as a covered call position, with a call sold at 52.5 against our shares owned already of Newmont Mining, and buying an extra long call for a cheaper price. We still get the 60-cent net credit, which means now the maximum risk would be reduced from 25 cents or 0.5% per share down to a negative 35 cents or negative 0.7% at risk. A bulletproof position, meaning that even if Newmont Mining goes bankrupt in the next 15 to 160 days, we're still guaranteed a profit of 0.7%. And because of that extra long call that we bought, we've satisfied the con of income method number 1, which caps the upside, and if Newmont Mining continues another gap up of $2 one day, $2.40 the next day, $2.50 2 or 3 days later, we've left the upside open in the proper structure. We have now satisfied all of the initial CEGA model for the position. And that is just what we did. On January 5th at 1:45-ish p.m. Eastern Time, we entered that income method number 6 position by selling the 20th of January 52.5 call and buying the 20th of January 55 call. Now, we only got 92 cents for the sale of the 52.5 call, and we paid 37 cents for the 55. So we only got a net credit of 55 cents on the position. But this still bulletproofed the trade to a guaranteed profit of $30 even if Newmont Mining completely collapses or the uncertain markets drag the stock completely down. Guaranteed profit of 0.6% with an infinite upside profit opportunity. A great way to start off 2023, a great way to bulletproof a trade right off the bat and still have 160 days now of insurance and bulletproof status in place with the upside open and still able to collect dividends. We have satisfied the complete CEGA model for the trade, and we can look forward to 2023 with Newmont Mining with no risk, unlimited upside profit potential, and still in the profit zone in any ranges of moderate trading from $45 up to $60 per share. That's radioactive trading in action. The initial proper structure with controlled risk for uncertain markets. The thought process of using the income methods and adjustments to further lower that initial low risk, generate income, potentially bulletproof the trade, and more. Applying the CEGA model correctly to determine which income method to use. And the blueprint discusses the CEGA model and how you'd apply it for each of the 12, really now 13 income methods that are discussed in the blueprint. And you actually saw the effect of 3 different income methods. What would happen with income method number 1? Hey, we'd bulletproof the trade. We might cap the upside. Income method number 4, we chose to pay a debit to increase the time in the trade and to get close to bulletproof status. And income method number 6, the power of that riskless spread trade, which solves some of the problems of income method number 1, got us to bulletproof status and left the upside open. We even briefly touched upon income method number 3, so you kind of saw the effect of 4 different income methods. But that's just part of the whole story. And if you want the whole story, you really should consider getting the blueprint. And of course, we extended the end of year offer, so now is the best time to get the blueprint and lock in the 8 special bonuses. The blueprint is the full course on proper structure, CEGA model for the initial trade, and each of the 12, really 13 different income methods. Chapters on combining income methods, which is what we just saw with income method number 4 combined with income method number 6, and so much more. Ernie decided to extend this special bonus offer to January 7th at midnight, Saturday, January 7th. You still have a few days to head on over to RadioActiveTrading.com, click on the Products tab, and pick up your blueprint. Or simply click the pop-up link that's appearing here on the screen to link to the purchase. Your 8 special bonuses, well, you can get your first month of Fusion for only $10 per month. That's a $59 discount per month or $118 value. You'll have access to the Forts video, the Foundations of Radioactive Trading, for free. That's usually an $89 purchase price. It's one of the 6 Mastery Series videos. We'll also send you the 4 Insider Secrets of Trading, the FIST video, $29 value for free. You'll have access to the Quick Start Guide to help you eliminate the guesswork about how to transition from your current strategy into the world of married puts and radioactive trading. You'll also receive 1 month of the patented Power Options tools for free with the real-time quotes. It's a $120 value. You get instant access. The blueprint is now all electronic. Don't have to worry about shipping, delays, supply lines, anything of that nature. You'll receive a link to log on and start going through the blueprint right away. Email and phone support for free. You want any help with explanations, clarifications on the structure, income methods, anything along those lines, setting up the tools, that's all available to you. The cost of that is almost immeasurable. We're always here, and you'll always have access to us as a blueprint owner. And of course, you get instant access to members-only content, various members-only webinars at RadioActiveTrading.com for blueprint owners so that you can increase the learning curve of the blueprint and much, much more. But again, we extended this once. We won't extend it again. The special 8 bonus offers are only available to January 7th at midnight. Whoa. Put on the brakes there. What happened to the bad and the ugly? What happened to the Schwab position that barely moved? What happened to the NEM position that's dropped almost 10% in the first few days of 2023? Well, we did use an income method on the Schwab position, even though we only opened it on December 27th. An income method can and may be used on the NEM position, even though it is down, following the rules in the blueprint. Well, we're going to share those with you tomorrow on January 6th, so keep an eye out for that. But until then, always remember, the full story is only available in the blueprint. You want to head on over to RadioActiveTrading.com, click the Products tab, click the pop-up link here, get your blueprint, get the full story, lock in your 8 special bonuses before the extended end-of-year offer actually ends in just a few days.